Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Janine, let's kick things off today with a significant report from the Canada Mortgage and Housing Corporation, or CMHC. According to their latest analysis, Ontario needs to ramp up housing starts by more than 130,000 annually to return to pre-pandemic affordability levels.
That's right, Steve. The report highlights a crucial need for more homes across Canada, but especially here in Ontario. To put things into perspective, they estimate that Ontario would need about 2.2 million new homes over the next decade to achieve those 2019 affordability levels. That's a massive undertaking.
Absolutely, Janine. The CMHC suggests that to achieve this, the pace of home construction across Canada needs to double. We're talking about needing between 430,000 and 480,000 housing starts per year nationwide. And in Ontario, the number is even more daunting when you consider the current pace is projected at just 92,478 annually.
It's definitely a challenge, Steve. But the CMHC also points out some key areas that need addressing to make this possible. They're calling for a larger, more modernized workforce, increased private investment, less regulation, fewer delays, and lower development costs. Not to mention, innovation in construction technology and improving labor productivity are also vital components.
Right, Janine. And while these goals are ambitious, they're not impossible. The CMHC's Deputy Chief Economist Aled Abiorworth emphasized that these changes are necessary to meet the housing demands. However, it's important to remember that these efforts will take time and coordination across various sectors.
Exactly, Steve. The report also cites Toronto as a particular area of concern, needing a 70% increase in home building over the next decade just to tackle affordability issues. It's a stark reminder of how widespread the housing affordability challenge has become, not just in Ontario, but across Canada.
And it's not just about numbers, Janine. There are real impacts on people's lives. Housing Minister Rob Flack's office acknowledged the progress made, but also pointed out challenges like global economic uncertainties and supply chain disruptions. It shows that while the government is trying, external factors can significantly impact these efforts.
It's true, Steve. An NDP housing critic, Catherine McKenney, has also voiced concerns, stating that neither Ontario nor the federal government have taken adequate steps to address the housing supply and affordability issues. She highlights the urgency of the situation given the growing housing crisis and its implications on jobs and productivity in the housing sector.
Indeed, Janine. The CMHC report underscores a critical need for action, and it aligns with the recent economic update from the Ontario Financial Accountability Office. They reported the lowest housing starts in any quarter since 2009, a troubling sign that emphasizes the need for a comprehensive strategy moving forward. Janine, let's shift gears to discuss the economic impact of housing construction in Canada. According to new figures from Statistics Canada, the residential housing sector continues to be a major economic force, contributing $143.4 billion to the GDP and supporting over 1.2 million jobs last year.
That's impressive, Steve. It's fascinating to see how the housing sector remains a cornerstone of our economy, even though there was a slight dip in real investment last year due to higher renovation costs and a slowdown in single-family home construction.
Absolutely, Janine. Despite these challenges, nominal investment in residential housing actually rose by 2.5% to $237.7 billion in 2024. This was largely driven by a surge in apartment construction, which saw investment jump by 6.9%.
It seems like the shift towards apartment living is becoming more pronounced. It's interesting how this trend helped offset the decline in spending on single detached homes and the slowdown in home renovations. I wonder how homeowners are coping with rising renovation costs, though.
Well, the data does suggest that renovation spending dropped by 4.4% in real terms, as costs rose by 4.2%. This could mean that many homeowners are holding off on renovation projects due to these increasing expenses.
That's understandable, Steve. It's a delicate balancing act for homeowners trying to manage rising costs while maintaining their properties. I'm curious about how this varies across different regions in Canada.
That's a great point, Janine. The pace of investment did vary widely by region. While nearly every province and territory saw an increase in housing investment in 2024, Ontario and British Columbia experienced a slight decline. In contrast, Alberta and Quebec posted strong gains driven by rising apartment construction in their major cities.
It's a reminder of how diverse the housing market is across Canada. And despite the challenges, housing remains a significant source of national wealth. The total value of housing assets reached $4.2 trillion in 2024, representing 25% of all national wealth.
Exactly, Janine. Ontario, for instance, added 99,000 new homes last year, with apartments being the main source of new supply. However, the report also highlights that Canada's housing stock is aging, with the average remaining useful life of homes declining to 58.9% in 2024.
That's an important consideration for future planning. As homes age, maintaining and upgrading them becomes crucial, especially in light of the growing demand for housing. It's encouraging to see newer apartment, row, and semi-detached homes helping to improve the remaining service life in some areas.
As we wrap up today's episode, let's take a closer look at the current summer stalemate in the Toronto real estate market. According to a recent article from CMP magazine, sellers are facing significant challenges as buyers exercise their newfound power in the market. With an increase in inventory and historically low sales, negotiations are becoming increasingly drawn out and demanding.
That's right, Steve. It's a tough time for sellers, particularly in the condo market. The abundance of listings has empowered buyers to drive harder bargains, and condo prices have taken a noticeable hit. For instance, in central Toronto, the average condo price fell by 8% in May compared to the previous year. It's a stark reminder of how quickly market dynamics can shift.
Exactly, Janine. The market is definitely tilted in favor of buyers right now. Real estate professionals like Christopher Bibby and Pritesh Parekh have noted that this is the most active number of price reductions they've seen in their careers. For those who bought at the market's peak in 2019, selling at a loss is becoming a real possibility.
And it's not just about numbers, Steve. There's a human element here, too. Many sellers are grappling with the emotional and financial implications of selling below their original purchase price. It's a challenging situation, especially for those who hoped to capitalize on the booming market of the past few years.
Absolutely, Janine. And despite the surge in supply, prices have held relatively steady for certain property types, like detached houses, which only saw a 5.4% decrease year over year. But with active listings up by 41.5% in the Greater Toronto Area, the competition is fierce and sellers are feeling the pressure.
Indeed, Steve, it's a delicate balance. Buyers are cautious, wary of economic uncertainties and potential job losses, even though they have more options and less competition. For those with secure employment, this downturn might be an opportunity, but it's not without its risks.
That's a great point, Janine. Even with more favorable buying conditions, the market is showing signs of being at its softest since 2008 to 2009. Buyers are negotiating hard, and some are even lowering their offers repeatedly, assuming sellers are desperate.
But as Christopher Bibby pointed out, aggressive tactics can backfire, alienating sellers and soaring negotiations. It's important for both parties to approach this with dignity and fairness. Many sellers still hope for 2021 level prices, but the market has shifted, and expectations need to adjust accordingly.
Looking ahead, The market might see some stabilization if positive economic developments occur, like a Bank of Canada rate cut. However, experts like Bibby do not foresee a rapid rebound. The current market conditions are part of a necessary correction after the rapid run-up in 2020 and 2021.
It's a time of tough choices for sellers, and buyers are certainly making the most of their advantage. As always, staying informed and understanding the market dynamics will be key for anyone navigating this landscape.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.